Money comes from several sources depending on what type of money we're talking about. Here's a breakdown of where money originates. 1. Central banks create base money, also called high-powered money, which includes physical cash, coins, and banknotes, reserves that commercial banks hold at the central bank. Central banks create this money by buying government bonds or other financial assets, lending to commercial banks. This is sometimes referred to as printing money, even though it's mostly digital. 2. Commercial banks create the majority of money in modern economies through fractional reserve banking. When you take out a loan, the bank doesn't give you pre-existing money. Instead, it creates new money by crediting your account. This is called money creation through lending. For example, if you get a mortgage, the bank creates a deposit in your account out of thin air, backed by your promise to repay the loan. 3. Government spending. Governments can inject money into the economy by spending more than they tax. If a government runs a deficit, it may borrow by issuing bonds, and central banks or the private sector buy those bonds. If the central bank buys the bonds, that can also increase the money supply. 4. Foreign exchange and trade. Money can enter a country through exports, foreign investment, or remittances. This doesn't create money out of nowhere, but it brings in money from outside the domestic economy. Key point: most of the money in the economy is created by commercial banks when they make loans, not by governments physically printing cash.